want to take a minute and talk about the target audience for this, for the Futures Trading Hub. So we're really targeting people that have been trained and are trained traders, yet they are inconsistent. You're frustrated. You're not making you're getting back what you put into your investment, and you're just frustrated with it. You don't feel like you have anywhere to go. Well, what I want to do is provide you with what my coach would have provided me to get over the humps, the tricks, the tips and the hacks that they don't tell you in most places. And I want to go through those. So if you're really looking for something more basic, more brand new to futures, then I'm going to put a link to a YouTube video below, and you'll see that it's an awesome 45-minute video on the basics of futures. The second thing I wanted to mention was the automated trading sessions, the last 2 sessions. Please don't feel like you should know that. That's the end of the game. That's the future. That's what I wanted to give you a picture of how you can proceed if you follow with me, and you can get to that point. So just don't worry about not understanding or knowing it. You're not expected to. So what I was planning was, after that, I'm going to go through all the tricks, all the tips, all the hacks that it takes to get to the automated trading system. So stay tuned. The first one we're going to go over with is today, and it's market depth. Let's get started. Okay, let's get started. Let's talk about market depth. All right. So confidence during trades is what I'm trying to target here. I use this in concert with other indicators in order to make me confident during the trade, so I don't get the anxiety that I'm sure everybody knows I'm talking about. We all lived through it. We have to overcome that. We have to find ways to overcome that. And these tools help me better understand if I'm in the right direction with the trade, even though it's going to go back and forth. I know that. So that's what I'm getting ready to start showing you is a series of indicators that are focused on what provides confidence during trades. We'll be able to predict the directional movement to a degree. You'll see what I mean later. We'll pair this with other indicators, and then we'll talk about how to set it up and where it's available at and how to use the tool. So I will tell you, market depth is a level 2 tool. So it needs a level 2 data stream. All you have to do is call your platform support and ask them, how do you get market depth? I know it's in TradeStation. Well, I'm going to show you in TradeStation, but I know it's in Thinkorswim. I know it's in most of these, but you'll probably have to call and ask them how to set it up, because most people don't even know it exists, to be honest. I have never heard people talk about it, not once, except for me. And I stumbled upon it when I was being coached, and he had me do an exercise, and I stumbled upon it, and I found out it really works. We use several tools to help directional price action. This isn't even all of them, but we're going to go through every one of these. You know several of them, right? I mean, you know what these are. But this is the market depth. These two are market depth. I got 2 up there because they're shown in a couple different ways. People use market depth in different ways. I'll show you how I use it. Then we have time and sales below that, which is what we use to see patterns of large buys, large sells, so on and so forth. And we'll go through all that in detail. So market depth with the exchange, it comes together. This, you'll see, these are all CME. If you had stocks, it'd be all the different stock exchanges that are out there, all the different exchanges that will buy on the New York Stock Exchange. But for futures, it's only the CME. So we use this as an indicator of how many contracts for that particular future, how many contracts are in place and stacked in place in order to either buy or sell a contract. So we'll go into a lot more detail later. But if you see people using this with exchanges, we don't use it that way with futures. It's just it is really, quite frankly, a very, very, very good view of the matrix prices that you can actually see and visualize. This is the matrix, obviously. This shows the correlation, And then this is a 610 tick chart of the NASDAQ. These are all correlated to the same exact price. And that's one reason I'm showing all these at the same time. And this one is another, that's a private, or not a private, but a proprietary indicator. It's invaluable. I will tell you, we built this and it's invaluable. And we'll go through that in the next session. So market depth will give you graphical representation of the number of contracts in waiting, whether it be buy or sells. The left of the market depth represents contracts that are under the bid. And the right represents contracts that is over the ask, right? In other words, if we go back and look at here, the left represents these that are bids. These are bids, and these are asks. And so an imbalance will show you a direction at an instant. They change quickly, but your eyes will start getting accustomed to this. Trust me, because I can look at it now and see whether I'm confident I'm in the right side of the trade or not. But that's the other reason I'm showing you this early, so you can start using it and just watch it. Watch it and watch the correlation between price. And then when there's not an imbalance and it's just all over the place, then there's just, you can't pick the direction. So don't even worry about that part of it. Don't worry. If you can't pick the direction, don't worry about it. If you can, that's when it's important. So these three together are important. This is market depth. This is the matrix. And this is price. So right up here, the very top, right up here, since it's a green candle, right, the very top is going to be the price for the contract that is being asked. It's either on the bid side or on the ask side. That's what it's represented up there. It's also represented here. Right here, it's a bid of the 19,883 and a quarter, it looks, or 75 it looks like. And there's an ask. The first ask is right above it, right? So what this shows you is here. There's two contracts that they'll sell a buyer for this price, and then there's 6 contracts, and then there's 6 contracts. Sorry, I don't have my glasses on. And there's 8 contracts and 7 contracts and 6, so on and so forth, all the way up the line, right? Same goes for over here. It shows how many contracts are in play below the line. Now, but there's no way in heck you can ever try to figure that out or see that. The matrix moves so fast, and you just can't see it. But what you can do, it's the same representation over here, right? So this is those 2 contracts, and this is, I can't see it because I covered it up. Then there's 6 is the next one, and then 7. So it must be 7. So then 7 and 7, and then there's 8. So this represents all the bids, right? So keep in mind, bid is going to be a person that's buying, and an ask is the person that's selling. It gets confusing. I get it, but the seller is asking a price for it, and the buyer is bidding a price for it. So what we're seeing here is the fight for the contracts, and we're seeing it stacked up, right? We're seeing how far back, how many contracts in this case are sellers willing to sell, and how many contracts are buyers willing to buy. Look at it. Looking at it this way without the other chart, it's the same thing. This is the middle of the price. And as you go up, those are these contracts with a graphical representation. Now you can get the numbers on the market depth as well, but this is how I use it. So you can see in this case there's a lot more buyers. There's a lot more sellers. It gets confusing. There's a lot more sellers here than there are buyers. That's an indication of an imbalance, and what that means is it's likely to go up, right? So the buyers over here, these are the buyers, and if the buyers want to buy it low, so the more buyers are here stacked up, then then that's a representation of it going down. Another way to look at it is if you turn it sideways, this direction sideways, you can see the same thing. These are all the same charts. So this is right here, 683.75, and this is the number of contracts. There's one contract, and then there's two contracts, and it's also the amount of the line is this line is based on the largest line. Just so you know, like this line sets the scale of how long these lines are. And this is not during market hours. So what you're seeing here is there's a lot less contracts in play. But here we have, notice that as we go higher up here, we have more contracts, and then up here we've got a lot more contracts. Well, you're seeing that the 16 and 17, or 18 and 17 actually, these contracts up here. And what happens is that the buyers will come up to buy it, right? If the sellers can get them to come up and they sell it, it's going to pull them upward. And there's more contracts here than there are down here. You can see that since we got the video stopped, but it's also a visual representation here. So it's bullish if it's on the top side of this, and it's bearish if it's on the bottom side. So let's talk a minute about what, again, it's just another visual representation, but let's talk a minute about the imbalances. Now, you notice this imbalance here. Now, the other thing I need to mention, and you'll see it when I show the video of the live market, that notice here there's no contracts, nobody's buying or doing anything right now, and that's because this is off. This is outside of market hours. It is, however, market hours for futures, but it's just like 7 o'clock at night. So you'll notice there's an imbalance on the ask side. There's a lot more people willing to sell than there are willing to buy. And so what will happen is that will start pulling people up. That'll start pulling price up because there's nobody, they can't, there's no contracts to buy down here, so they have to go up to get them. Right? Same goes for the bid side. If you have more on the bid side than you do on the ask side, then it's bearish, right? Because these people are willing to spend money, and so these folks have to go down to where the money is, right? So that's just another way of looking at it. So the only way I use this indicator at all, and you'll see it, I'll show you, and you'll see it on my charts as we move forward too, but the only way I use this is a visual representation of the matrix, just so you know. Other people use it different ways. I saw a YouTube video of somebody that was using it, and they didn't even mention this. They didn't even mention the visual representation. So it's just not how they use it. That's how I use it. That's one of the indicators I use to overcome my anxiety. It helps me understand if I'm on the right side. Now, a lot of times what will happen, we'll show that. I'll show that later on in the thing. So let's go ahead and start looking at a live market. Okay, right now we're going to look at examples of two trades. One trade, we're going to see the before and after, because the after is very, very important, right? So we want to look at both. And we want to look at also one during a trade. So we're going to first look at one that is the before and after. Now, look at this and notice the imbalance over here on the ask side, right? Where otherwise it would go up. This is indicating it's going to go higher. But notice there's a lot more times that it will balance itself that direction. Now, I'm going to try to find a level of imbalance in here. So there I entered the trade. And you'll see I'll get through the trade really quickly, just for sake of time. And now as I'm coming out of the trade, I want to know, is this thing going to keep going or is it coming back at me? Because my strategy is when it comes up and hits the middle of the channel, I get in the trade. So I'm wondering, okay, is this going to come back at me? Well, you can see right now it's all over the place. There's really no pattern. Now this has one long candle. This may be a little bit on the ask side, but see how it's going back and forth, back and forth, back and forth. That tells me there's no direction. There's no volume within that candle. So I've got another tool that represents volume in the candle, but this one is just telling me that these don't. And look at it; it's just all over the place. It's just going bouncing around. So this next one is during the example during the trade, and this could have been a very stressful one if you didn't have a window into what's going on in that candle. So now notice I'm doing really well. Look at this. I've got a lot of imbalance I had a lot of imbalance to the bid side, so it was going down, but then it turned on me. And now this is going to be pretty stressful, right? Because now it went in my favor, now it went against me. Now it's sort of going back in my favor. But look at this. See all this buys? That tells me I'm going to get stopped out, right? It tells me I'm going to go back to that again. Look at this. See these two long. Look at all the contracts there that they're getting ready to. That they're more than happy. Look, it's 58.28 up here. So there's a lot of contracts here. And by the way, this will not always synchronize in real time. And I think it's because of the way TradeStation or any platform, actually how they split the data when the data comes in. The data is going to come in and go to the matrix or the order system first, would be my expectation. I don't know that for sure. But then it takes a while. Sometimes they're a little out of sync, but even being a little out of sync, to the naked eye, you're not going to tell it. I can only tell when I stop here, right? So we're going to keep going, and you'll see. I was thinking it was going to stop me out. Look at it now, but it's going up. But I'm seeing more on the sell side. So this is where everything changes. And it keeps going. See how much on the bid side. I call them sell and buys, but they're really the bid and the ask. So on the bid side's on the left. Look, see how much more the bid side is volume. It has more often. So that's what's telling me I'm in the right side of the trade. And then it comes up and you're gonna see it's gonna turn around a minute, but. You can see that there's just a lot more volume on the bid side, and having more volume on the bid side means somebody that's buying a contract wants to buy it as cheap as possible. So they're going to try to get it as low as they possibly can. Now it switched around, but when it went up, let's stop it there. When it went back up here, it went back up with very little volume. I can tell it in a couple different ways. One, these are volume candles. And see, it came down on all this volume, but when it went up, it was very, very little volume. So it's telling me, and this was at an imbalance. It shows an imbalance right here. But this was more balanced throughout the time that the candles went up. So that's what that's telling me is when there's balanced and there's no volume, it's going up, yes. But it's not going up to continue to go up. It's just part of what these markets do. These markets go up and down by their nature. You have to buy into that. You have to understand that because that's what's going to happen. It's going to continuously happen. So, but what I want to know is when it does turn around like this, is it turning around with volume and with force and with power that it's going to keep going the opposite direction? But this one was not. And you'll see that here in just a second as soon as I find see, it went up. Look at it going up, but it just doesn't have the imbalance. See, look at all the sellers. I'm sorry, all the bids that came in. Well, now it's going to turn around and come back on us. And so it's going to stay imbalanced now, and it's going to go and take out my trade, I think. It may take a couple more candles. But nonetheless, what you're looking for, once you can learn how to see this, I've been watching this for several years. I can see the patterns. You won't always be able to see the patterns until you start watching this over and over and over, comparing it with price action.
Order.
It's really what my suggestion would be is call your platform, whoever owns your platform, call them and say you want layer 2 order information. Some I think most of them do call it market depth, but I don't know if they all do or not. But tell them you want level 2 order information, and they'll know what that means, and then they'll tell you how to set it up. So until next time, that's it for this strategy. The next one we're going to look at is this one down here. This is the most valuable thing I've got in my arsenal. And this is what really tells me the direction of the trade. So in conjunction with everything else. So have yourself happy trading. Have yourself a great day, and we'll see you next time on the Futures Hub. All right, let's talk about what comes up next. I'm most excited about one that will an indicator that will drop in the next few days. It's called candle X-ray, and a candle X-ray is my own indicator that's designed to tell me what's happening inside a candle. It works with tick candles, it works with minute candles, but it helps me understand who's winning the candle, right? You might be seeing a green candle, but that green candle may not mean that throughout the time that candle's been building, it's always been there. It also doesn't tell you whether price moved it or whether volume moved it. This will tell you that. So I'm excited about it. This is the one that I work with across the board to help me keep confidence and reduce anxiety throughout my trades. So I'm looking forward to that. That'll be next. After that, we're going to be looking at time and sales. So time and sales is another one that's important to me because I use all these in conjunction. Market depth, candle X-ray, time and sales, and a couple others we'll talk about later. I use them in conjunction together on a single chart. So when I'm in a trade, I'm watching all of them. And each one tells a different story. This time and sales will tell us quickly whether or not we're starting to see wide volume changes, and whether we're seeing a lot of tick volume or whether we're seeing a lot of just regular trade volume. Now, tick volume, as you know, you see it on this particular chart here where it has a plus sign or a minus sign after it. That's a tick. Now, I go by a 610 tick candle, so it counts up 610 times that happens and then builds a new candle. So this is telling me whether I have volume in the candle or whether I'm just simply moving it. It tells me a little bit of everything. So I'm looking forward to going that in more depth with you. Now, you can get a lot more out of the time and sales, like you can with some of these other indicators. I'm trying to show you how I use them so that helped me throughout my 15 years become profitable and become confident and reduce trade anxiety. Come back to this channel in the next couple days. Obviously, if you subscribe, we'll email you, or you can share and you can like, because the more shares and likes we get, the more widespread our audience is going to be, the more information we're going to have, the more ideas we have, and the more we'll be able to get ideas for future lessons or even live trade discussion. Well, happy trading. We're gonna sign off now. This is A2 Trader signing off. Please feel free to like, share, and subscribe. Happy trading.